Welcome to another episode of the Weekly Crypto Check-In, recorded on June the 11th, 2025. I'm your host, Robert Swartha, and joined by my co-host, Andres Sandate. How's it going, Andres?
Hey, Robert's good. It's been a couple of weeks since we've been able to record, so it's nice to be back, and I hope your summer is going well.
Yeah, it's these weeks, they not tons of news and all of a sudden a bunch of news and then kind of this weird pendulum of sorts. So we have some fun stuff to talk about. It feels like progress is being made. This is one of these episodes where we're not going to complain about as much stuff as we sometimes do, and kind of get to talk potentially about the future a little bit here. So
Yeah,
should be pretty cool.
Yeah, regulation, market trends, some corporate events. So yeah, some good stuff to talk through.
Yeah, absolutely. So our first topic, the Clarity Act, and this is the bill that has started moving through the House for basically bringing clarity to the regulations around digital assets. So we have the Genius Act, which we'll get to in a minute. That's for stable coins. The Genius Act is further along, but the Clarity Act is playing a little catch up here. And admittedly, it is further along than I expected at this point. You kept hearing rumors that it might happen, and I've learned with Congress, rumors are probably about the opposite of what's going to happen. But it's cool. So the House Ag Committee, which is weird that it comes to that, but for whatever reason, it came through the House Ag Committee. It got voted out of that actually rather strongly. The votes was 47-6. So there's a lot of senators. Well, a lot of Republicans and very few Democrats seem to have voted, or however that works. But it made it through that. And then they did a markup session, and now it's headed to the floor, apparently like a marathon markup session. And again, I'm not too adept at to be able to explain what a markup session is, but I know from everything I read, it did take a while. And then now it's headed to the floor for discussion, which is pretty awesome.
Yeah, like you said, it's moving to full house next week. I think the couple of headline sort of takeaways, or if you dig into kind of this Clarity Act advancing, is the goal is, I think, to try to define for the market the SEC versus the CFTC's authority, both being regulators, right? The Securities and Exchange Commission, and then the Commodities Futures Trading Commission, the CFTC. Their authority over digital assets, right? Which hopefully will fill some regulatory gaps, and the objective of being it should support and hopefully will enhance the amount of innovation. So I mean, I think it's likely in that bigger markup that you're going to see, whether it's amendments or it's individual stakeholders really start to push for positions. That's where I think the optimist in me is hoping that when it gets to that full markup process, we don't end up with a gutted bill, and we don't end up with a bunch of sausage, pork as they call it in Capitol Hill in there in order to get it over the hump. But it does bode well that it was more of a bipartisan vote, right? The numbers, as you mentioned, 47-6 in ag and 32-19 in financial services. So yeah, there's going to be conflicts between the CFTC and the SEC until we get some type of clarity bill. The irony is they're calling this the Clarity Act, and I'm hoping that there is clarity.
Yeah, from what I've read from people that are, like, I guess, more deeply reading the bill, it's an interesting compromise that's being made, because we would not have liked this kind of bill to potentially be passed in the last 4 years, because it leaves a lot of the rulemaking up to the regulators, and like obviously that wouldn't have worked, at least in our opinion, from the industry, with the SEC last 4 years. So I don't know.
Yeah. Do you worry at all that with the two parties involved here, I guess we're calling parties, I have to clarify my terminology. We don't mean Republican, Democrat. We mean, the two agencies, this SEC and the CFTC,
right?
One who oversees securities, the SEC, the other commodities, the CFTC. Do you worry at all that there is going to be, I guess, just too much fragmentation in a space that just can easily get highly fragmented and sort of a lot of turf battles?
Yeah, my hunch is, and I hope I'm right about this, is that the bill gives enough space for the regulators to come to, I guess, agreement. The two regulators, right, the CFTC and SEC, come together to make a framework to help define these things. Because there's no doubt when a token initially launches, it's a security.
Yeah.
But like over time, it can morph into a commodity or whatever it may, a new definition we might end up with. And that's what I think I like about Hester Peirce at the SEC. She has this whole like 2-year period where she talks about the safe harbor, where it can kind of go through that. It has to hit milestones and it can get out of it. If that can get put into, I guess, as a rule that the SEC follows, the CFTC also understands where the handoff would be, and they agree upon that, I think that could be a great thing. Again, rules can be more easily changed than laws, so that there's a risk there. But I think once there's an established kind of method to the madness going forward, then maybe it's a little more like a law in some sense. So
yeah,
we'll see. But I hesitate to say that any rules are better than no rules. But with proper regulators in place doing their jobs, I think that level heads have started to prevail a little bit here, and we'll get some good guidance, maybe even late summer at this point. So
yeah. And I think for people listening or those at home, it's vital that we get this clarity, because there is obviously there's still a lot of innovation to happen. There's still a lot of adoption to happen of digital assets and more broadly just the technology, blockchain technology. So I think to visibility around where we're going
mm-hmm.
the SEC here should unlock more activity more broadly in the industry, at least here in the US.
Yep. Awesome. Well, we'll move on to something we've talked a little bit about already, but so the Genius Act negotiations are really heating up. Again, the Genius Act is the bill that's going through the House and the Senate right now around defining stablecoins.
Right.
They have to be backed in a certain way. They're 1-to-1. Interestingly enough, this current version of the bill does not allow holders of a stablecoin to receive any yield. So the issuers of these are the ones making the money. And we'll talk about that here in a minute with Circle, but it is interesting to kind of see the progress. So again, we just talked about the Clarity Act. It is catching up with the Genius Act, not quite at the same stage, but close. And it's just good progress.
Yeah, I mean, if you look at the votes, it was 66-22 at the Senate to proceed. So again, pretty bipartisan by all accounts. And I think the goal being you want some consumer safeguards, right? You want to have something also to address the AML KYC concerns that are out there. And so I think the question, to be hammered out here for this one in terms of, it passing the Senate, and then obviously it's going to have to go to the House, and then ultimately through a final vote is, has the industry done enough, or has more importantly, have the elected, officials, the Senate and the House, have they done enough to address KYC AML? Because there have been obviously more laundering activities, illicit, organized criminal behavior using stable coins. So it's just a question of, can we, as we start looking at the reality that this will be here, being stable coins, have we done enough to, hopefully address some of those lingering concerns? But yeah, it's the summer, right? So it's good to see that our our elected officials in DC are making progress on both the Clarity Act and also the Genius Act.
And one thing I'll mention about this whole, there's no yield to holders of a token of a stablecoin. A line of thinking that I've heard there that explains why this is happening. So stablecoins are backed 1-for-1. It's not fractional banking that you would get at a traditional bank account.
Right.
There might be concern that if you could get yield on a stablecoin, you would feel more safe because it's backed 1-to-1. So you would not keep your cash in the bank, and you would use a stablecoin. Whether that's true or not, I'm not sure. But it does have some weight to it, as maybe a reason that it could be being enforced the way it is. So
Yeah, and we've got a headline, that we did talk about, obviously coming up here to talk about the IPO of Circle, but
mhm.
um, one that we didn't add in here is just the activity. You mentioned this before we went live around the banks, and one large bank, Bank of America CEO Brian Moynihan announcing that there's a more than a project, right? It sounds like an initiative of
Yeah,
players that are pulling together. To me, I'm speculating.
yeah,
Clearly, there's no public comment here, but from him, from Moynihan at Bank of America. But I think the banks are taking notice, right? There's likely going to be a role that they're going to want to play in the
yeah.
stablecoin.
Yeah,
Um,
and when it comes to crypto, just generally, the banks work on a 24-hour clock. Their settlement cycles, they settle once a day. All of a sudden, they're going to be in a world that settles instantly. Like, how do these two worlds collide? They got to make sure
yeah,
they do it right, or they could have major problems.
yeah.
And especially a big bank like B of A that, I guess we as a country do not want, whether you like these banks or not, you just don't want them to have problems because they could have huge cascading effects there. So
Yeah, those systematically important financial institutions, I guess, as we come to call them.
yeah,
I think the skeptic calls them the too big to fail banks.
mm, yeah, yeah.
That got caught up in the GFC with all the bad mortgage paper that they traded or held.
Yeah. Awesome. Well, we'll move on here. So, kind of staying with the SEC a minute here. So, Paul Atkins was at the last of their six roundtables that the SEC put on about for crypto, and each one has had a specific topic. But this one, he gave a comment that's saying that he's a big believer that in basically that self custody, because that's very important to crypto, but also just the idea that bearer assets are something that you couldn't have. They've been trying to, they being the system, we'll say it that way, has been trying to kind of make this harder for people to have since 1994. I've learned as part of this process in reading, but it looks like maybe we're turning a corner. The question is how much of a corner can be turned and how much can be put in place during a 4-year term, right? It's assuming that the Republicans can kind of keep the momentum here in another 4 years. So
Well, yeah, I mean, this kind of goes back to sort of the founding ethos, right, of crypto, right? This
yes.
whole notion of self-custody versus and user, user choice, user freedom, right?
Mhm.
Big departure, signaling, a move away from the Gensler SEC era of just kind of general enforcement. And look, it is a positive sign. I know a lot of industry participants that have been, vocal and notable on this topic came out and said that, this is a sea change for DeFi, for open source, for, staking and all sorts of other crypto digital asset initiatives. So
Mhm.
I think it comes down to, yes, this posture could enable innovation. At the same time, the looser and more, I don't want to say less regulated, but the more we enable the sort of permissionless open concept. I mean, just because of the fact that we have cyber criminals and we have that element out there, the more unfortunately, folks are going to be susceptible potentially if they're not doing the self custody in a smart way, in in an institutional kind of way.
Mhm.
Um, it could lead to fraud, hacks, poor decisions, bad disclosures. I mean, there's just a lot of things they're going to have to get. People are having to get educated around.
Yeah, absolutely. Well, sometimes those topics can be very boring, but right now they seem exciting.
Yeah, they
So,
are. I mean, custody is a hot one right now.
yeah, yeah, absolutely. Okay, well, our fourth topic here is Circle IPO this last week, and you know, for those that have been listening for a couple episodes, you may have heard us talk about how Ripple was trying to buy them, and there was rumored that they offered 5 to 7 billion, and then even a crazy rumor I thought at the time is, oh, they offered 20 billion and Circle turned them down. Well, obviously that they didn't get a transaction done, and they IPO'd this last Thursday. They priced the IPO at $31 a share. It opened at $69 and closed over 100, and even today it's at 118. So a good gamble on their negotiating skills there.
Yeah, I mean, an initial, a lot of, I don't want to call it hype, but just a lot of enthusiasm, right? We talked
Yeah.
about before we went live, just some of the ETFs that and/or funds that are dedicated to focusing or covering or being a proxy for the digital asset space or buying up the shares. So there's obviously support. So I mean, yeah,
Mhm.
fantastic opening for Circle. Obviously, there's got to be a lot of companies in crypto that are taking note of this.
Mhm.
If an IPO or some type of capital strategic event was on the drawing board for 25, you have to think that they maybe see a window right here
Right.
where there's crypto investor enthusiasm. Um, and as you've noted, with Ripple and their attempt to, or at least the news that they wanted to buy Circle. I mean, I think the comments that Brad Garlinghouse came out with, saying that this is bullish for stablecoin legislation, when we've
Mhm.
been talking about stablecoins here today in the episode, is a lot of momentum.
Yeah.
Um, you know, we also talked about the fact that the IPO market hasn't had a lot of big notable um, uh, there haven't been a lot of notable IPOs recently, and this has been one of the most successful ones in decades, regardless of industry. So in terms of performance, right?
Yep.
So yeah, it's a when you take it combined with some of the advancements of the legislation, it's been a good few weeks for crypto in what is normally sometimes a slower period.
Yeah. 100%. Yep. Um, so this next one maybe is a little clickbaity, but is so California passes a bill to seize Bitcoin. Okay,
Yeah,
well, we need to unpack this a little bit because this was the headline that I saw, and I'm like, holy crap! That, first of all, you can't just seize it on the blockchain. There's more. It's more complicated than that. But what's happening here is they passed a bill that said that after 3 years of inactivity of Bitcoin being left on an exchange, it can be taken by the state under the unclaimed properties law. Okay, maybe that makes sense. So now it's not really about attacking the blockchain or anything like that. It's purely like, um, it's not used, but people often buy stuff and just let them sit in their Coinbase account. There's people that have held stuff for 10 years. So like,
hmm
what does inactivity mean? There needs to be a lot of definition around this stuff, in my opinion, that seems to be missing right now.
yeah. I think that there's a long way to go here for this bill. There's a lot of criticism I could throw out.
Mhm.
It undermines the whole notion of self custody.
Right.
Again, if you're a Californian and you bought it and you're going to hold it in a trust or an account, for example, and your intention is to be a buy and hold, why should the state care?
Hmm.
Is my initial thought.
Yeah.
And you get these notices every once in a while about unclaimed property. That you
Yeah.
have 38 cents in an account, from a decade ago. I mean, I get those every
Right.
10 years. And this feels a little different. This feels a little bit more proactive in some respects.
Yeah.
I haven't, candidly done a lot of work on this AB 1052.
Yeah.
I'm always curious where these things were born. Like, who
It
sat
does.
around and thought of this and said, let's bring up this crypto wallet seizure idea.
Yeah.
Well, seizure may be not the right word, but you get my
Yeah.
point. Like this notion of inactive counts for 3 years, and why 3 years? So I just have to do
Right.
more reading on it.
At the end of the day, it's going to be on a Coinbase, it's going to be on a Kraken or something like that. So yes, the law could be put in place, and if Coinbase wants to do business in California, they just need to follow the law, or whoever it may be. But like, shouldn't they be the one deciding what inactivity is? Like, if they're fine custodying it, well, why does the state of California need to care?
Yeah,
It does seem a little bit disjointed,
yeah,
but it is now headed to the Senate in California, so maybe the Senate is more level-headed. I have no idea, and I'll leave the politics alone on this one, but
yeah.
we'll have to watch this one. So
Yeah, something to watch. I mean, The question is, does it inspire or does it, lead, like we saw with folks wanting to set up, Bitcoin reserves, right? 6 months ago,
Mhm.
it seemed like there was this whole push by states to go and set up Bitcoin reserves. We're not hearing much about that anymore, right? It
Right.
seems like, if anything, these things sometimes lead to a domino. Somebody gets a kind of a zany, wacky idea
Mhm.
from a self-interested party and decides, to go push. It feels like an agenda, and it turns
Right.
into a bill. You know, does that bill ever become law? Who knows? We'll report back, I think, if there's anything here.
Yeah. Absolutely. So next topic is the SEC introduces a framework to clarify crypto tokens, whether they're securities or not. Um, and this is the early part of the rules making stage. This is not actually like being enforced yet, but the idea is characteristics that may trigger something to be considered a security. If it's an ICO that is profit centric marketing, okay, fine, that's probably pretty obvious. If it's a utility token with financial incentives. So I think that may be a utility token that has a yield attached to it, is another way that I am kind of reading that. I would like to see more definition around that, because there's a lot of definition of yield. Is staking considered yield? That's just really securing a network. My guess is no, because they've talked about staking not being a security or a security act. The third thing would be profit sharing governance tokens. That makes total sense. That's no different than obviously like a dividend, if you want to use more traditional language, and just legal precedents for other court rulings. So some tokens are part of a DAO, and a DAO could be considered governance, or it could be considered ownership of something else. So I don't know. It's progress here. I mean, we were begging for this kind of thing for 4 years, and now we almost get it on a weekly basis. So
Right. Yeah. I mean, I did a little digging here on this one to try to put it in more, I guess, digestible terms. I think easily when you start reading, press releases and news from these regulators, it's easy to get lost in the weeds real quickly. To me, this kind of comes down to function over form. Like what you just said, what's the purpose
mhm.
behind the project, or what's the purpose behind needing the token? Um, and maybe it's a way to preempt and sort of head off some of the uncertainty that comes when these developers and companies are thinking about these projects, right? So
Mm,
that they can remove that shroud or that cloud of uncertainty in terms of enforcement or potential legal action that could come.
yeah.
I think it helps that developer, early on, that's kind of thinking through the design aspects. And when there's a reason in most contracts you read, there's things like safe harbors, right? And there's things that spell out for both parties, like what are exempt,
Mhm.
what's the terminology, what are safe harbors, what are exemptions. I mean, that all through kind of case law has been developed over time, and just haven't had that in crypto. And so I think for me,
Right.
this allows the beginnings of that conversation, and hopefully that framework from the SEC around, you can go and do this, but you can't do that.
Mhm. Yeah, absolutely. Cool. So our next topic is Hidden Road gains membership status with the DTCC. So we talked about the DTCC either in the last episode or the one prior. They were talking about tokenization at that point. This is interesting to me because Ripple recently announced they're purchasing Hidden Road. That has not closed yet, but they're working through that at this point. The membership part gets basically elevates them to an extra higher level, is my understanding. And the DTCC is settling $2 trillion on a daily basis. That is a lot of volume. And to think that
Yeah.
potentially with Ripple's plans with Hidden Road wanting to settle a lot of the XRP ledger, I'm not saying this is all coming to the XRP ledger, but it could be, some of it at least,
Yeah.
is
Potential
pretty
partnership.
interesting.
Yeah.
Yeah.
Yeah. It gives them access to, a lot of treasury markets use the DTCC for settlement. So obviously this integration between, you know, um, like a global clearinghouse like DTCC and Hidden Road, which wants to put in place DeFi protocols to get more instant settlement, et cetera.
Yep.
Sort of certainly big ramifications there. And then, just this ongoing bigger, I guess, discussion between us and hopefully those out there that really care is, this convergence of traditional and decentralized finance, right?
Mhm.
Or TradFi and what we are talking about here, is crypto, and how these two ecosystems are continually,
Mhm.
beginning to overlap. And yeah, there's so much legacy plumbing and legacy operational. This is how it's kind of always been done with incremental improvements.
Right.
This is a watershed moment, right?
Mhm.
In
Yeah.
terms of there's pretty dramatic shifts and changes that are going to take place over. You got to think over the next year or two.
Yeah. You just said something that made me think, and this is more of a question I'm going to pose. So we often refer to TradFi and crypto or DeFi, these two worlds colliding at some level. Um, do you, do you think that this ends up being TradFi absorbs this technology and it stays referred to as TradFi? Or is there going to be a new name that comes along? Because they're obviously not going to be like, oh, TradFi is gone, it's only DeFi anymore. So I don't know. This is kind of
Yeah, I think much, maybe much to the chagrin of purists who want
Mhm.
to live in a utopia of open protocols and 100% self custody. I just there's too many dollars at stake.
Yeah.
There's too many stakeholders that have powerful interests to think that TradFi won't
Mhm.
won't be a big player here. So I think they
Yeah.
end up calling it what they want,
Sure.
and they used to be, we used to use the term back in 9, 10, 11, like the too big to fail, and we used that term moral hazard
Right.
to mean like these banks that took tons of risks. Now we just say they're SIFIs. What the hell
Right.
is a SIFI?
Yeah.
Well, somebody came up with the term. It's a systematically important financial institution. So now banks call that's a moniker. They want to be one of those,
Right.
right? I mean, they do and they don't, right? So to me, that's just a way of saying, um, we can't fail. The bank will always back us up, or the government, the
Right.
people will always back us up. I think that's a way of saying the big, powerful financial stakeholders and players are going to decide what we ultimately call this
Yep.
innovative traditional financial institution.
There you go. That's good. Cool. Well, our last topic here is probably a quick one. So we've talked a lot about over many episodes, companies buying Bitcoin and putting it on their balance sheet.
Yeah.
They have all their different reasons, but we've only talked about Bitcoin. We started to see some shoots of companies being like, no, we're not touching Bitcoin. It's going to be something else, which raises other questions is like, so, okay, Bitcoin was the whole digital gold. That was their marketing angle for it. So we've seen, and I only pulled two examples. There's others, one for Ethereum and one for XRP, two separate companies. Webus is a AI driving company or vehicle driving company in China that they're buying $300 million worth of XRP. And there is a SharpLink Gaming, believe they're based here in the United States, bought $1 billion of Ethereum for their treasury. So these seem more speculative. You can try to like find this nuance when you're talking about Bitcoin, like, oh, it's gold, it's digital gold. I'm not really speculating on the price. Everybody's speculating on the price, to be very clear. But it's just interesting to kind of see these other ones start to pop up that are not marketed as digital gold. So
Yeah, I mean, there's three or four things that I kind of wrote down to mention here beyond the the treasury angle of at the beginning of the year I was kind of really paying attention to these corporate treasuries and were they going to buy Bitcoin or other digital assets. So I think there's a couple thoughts. One is are corporate treasuries starting to look at utility? That's to
mhm.
me a
Right,
trend. Um, because there's just clearly more utility for XRP and ETH and
right.
in this case
Everything but Bitcoin,
ETH,
really.
right, than Bitcoin. So I
Mhm.
mean, I think from the standpoint of just um, utility, that's a trend, I guess, to pay attention to. You talked about the allocations and some of the names, right? So
Mhm.
it's not a lot, right, in the grand scheme of things of corporate treasury assets, but I think the size and scope of those allocations is starting to be a trend. You know, historically, treasuries have relied heavily on kind of, the money market, the treasuries, highly liquid,
Hmm.
I guess, assets, right? And so now, the notion of getting into some of these, or just diversifying, like even a small percentage away into things that the market may perceive as illiquid, is
Hmm.
another trend to kind of pay attention to, because if they start adopting, they might that might be a signal or a shoot, like, to use your terminology, that there is more liquidity there than people are giving those tokens credit for, right?
Hmm.
Because
Yeah.
if you're a corporate treasury, I mean, again, rules and governance and all this is different in country by country. But if you start seeing, um, the G8 type markets where these treasuries are saying this stuff passes all of our tests from the standpoint of liquid, et cetera, that's
Yeah.
got to be looked at by, the market as a, you would think, as a positive development, or at least,
Hmm.
if for me, a trend you're paying attention to, because I think that's
Yeah.
one of the big question marks about some of these tokens is their liquidity, right? And is everybody talking their own book? And is everybody,
Hmm.
pumping and dumping, if you will? So there's a lot of kind of institutional, I think, people paying attention here, and something, I think, certainly a trend to, 3 or 4 trends to watch,
Hmm.
beyond just the diversification headline.
Yeah. Awesome. Well, I think that's a wrap. So thanks for joining us on this episode of the Weekly Crypto Check-In. To stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.